Welcome back to the Cottage Food Operations mini video series. This is Business Structure and FBN. FBN stands for Fictitious Business Name, which is one of the items that you will need to address depending on your business structure and the proposed name of your business. In order to operate any business, you're going to have to adhere to certain restrictions and regulations based on a number of entities. Those might be federal, state, county, or even local ordinances that will determine whether you can or cannot do what you want to do. And you might need to file with some, if not all, of these entities. One of the first questions that you need to ask yourself when you're looking to start up any business, and this applies to a CFO as well, is what is your business structure going to be? There are a number of different business structures. There's a corporate structure, and that could be either a C Corp, an S Corp, or an LLC. You could be a sole proprietor, you could be a general partnership, or the like. But what it really comes down to is an assessment of your risk level and how it pertains to liability issues and the cost involved in not just starting up your business, but also maintaining your business. The easiest business structure to set up is a sole proprietorship. The sole proprietorship is almost exactly that, one owner. That business is owned by one individual and run by one individual. It is the cheapest, easiest to set up. The reason being is you may or may not actually even need a fictitious business name, depending on the name of your business. But as soon as you start making sales, there's no further paperwork to fill out. However, here's the problem. Liability issues are real. If somebody sues you as a sole proprietor, they are suing the business, right? But in reality, no. The reason being that there is no legal structure, legal entity to that business. As a sole proprietor, there's no separation between you and the business itself. So when they go to sue a sole proprietor, it defers to the legal entity behind that business, and that legal entity is you, the individual. Therefore, any damages that are incurred by that business, or debt that needs to be paid, or settlement that needs to be paid off, is on your shoulders. In that case, let's just use big numbers because they're easy to understand. You get a $3 million settlement against your CFO, you have a $1 million general liability policy that covers $1 million of that, you still have $2 million remaining. Who's going to pay that? You are. And that, my friends, is where the problem lies. As a sole proprietor, if you cannot cover the costs of that settlement, now you are filing for bankruptcy, your assets and possessions are potentially on the line, and that could lead to dire consequences for you and yours over a long period of time. The corporate, C Corp, S Corp, LLC structures, however, are one way to avoid problems when it comes to liability. Because in reality, when you're creating an LLC, S Corp, or C Corp, you are creating a legal entity. So when somebody sues the business, it gets deferred to the legal entity behind it, in which case the business itself is its own legal entity. Let's use that $3 million settlement from a moment ago. You get a $3 million settlement. Your insurance covers $1 million of that. $2 million remains. Worst case scenario, your LLC, your S Corp, your C Corp fails and has to file for bankruptcy to cover those costs. You, however, as an individual are protected and your assets are safe. However, there is a caveat. You need to set up your corporate structure properly and you need to run your business properly. One of the ways that you want to run your business properly is through the use of a fictitious business name. When you create a legal entity business structure, such as, let's just use the LLC, I am going to make Jay's Cookies LLC. I would need to utilize that full legal name every single time I refer to my business, Jay's Cookies LLC. If I change a letter, a comma, a period, or brief it down to Jay's Cookies, now I am no longer using that legal name, in which case I am not following the rules of the corporate structure. I am not utilizing my actual business name. And this is where the fictitious business name comes in. A fictitious business name, or FBN, is also exactly the same as a DBA, or doing business as. They are the same thing. It's just whichever one you can wrap your head around the best. What they do is they create a name, a common name for your proper full legal name business structure. So Jay's Cookies LLC could be doing business as, or using the fictitious business name of Jay's Cookies. It's the common name, it's the everyday name. That is one way that an LLC, S Corp, C Corp can get in trouble, is by utilizing a common everyday name, but not actually having filed for an FBN. Another way a corporate structure can get in trouble is by not properly setting it up in the first place. There are a number of different ways to go nowadays. You can go directly to the Secretary of State, file your name there, and prepare your own statement and information. You can go to LegalZoom or any of these other online services to get it done there. I will say, however, that the best way to do it is to go to a lawyer. A business lawyer might cost you upwards of $1,500, but it is going to set up the structure properly to withstand litigation better than other options. Not setting up your corporate structure in a legal way to begin with, or a proper way to begin with, if you are litigated against, makes it easy for a prosecutor to win a judgment against you. Well, maybe not easy, but easier anyways. Another consideration when looking into all this fun stuff is whether or not you can afford to do so. So not only does it cost a lot to get a corporate structure put together, especially if you're going a lawyer route, but another thing to consider is that you also have to pay minimum $800 a year fee to keep your LLC or corporate structure solvent from year to year. So you might ask yourself, as a CFO, what's realistic for me? It sounds like a CFO can operate as a sole proprietorship, but should I go that way? I'm kind of hesitant because of the liability issues involved. But on the other hand, a corporate structure sounds like it's going to cost me $1,500 to get set up, or maybe $500 to get set up if I go some of these online services, and then I'm going to have to pay $800 a year. That seems really high. Ultimately, the decision is yours. I will say this, however, that most CFOs end up as sole proprietors for a couple of built-in reasons. Number one, we've already gone over the approved foods list. As a CFO, you are only allowed to do things on the approved food list, and that list is designed to avoid potentially hazardous foods or problematic ingredients. Processes, ingredients, and what you can do is limited to keep things as safe as possible just by virtue of following that rule. There's another item that we're going to talk to more when we get into packaging and labeling. Once you've determined what your business structure is going to be, the next decision is whether or not you need to get a fictitious business name. If you decided on a corporate structure, I almost automatically say yes, you would need a fictitious business name. Can you operate without it? It's possible. It just opens you up for possible problems. Filing for a fictitious business name is a two-step process. You take and file an application with the county clerk of your respective county, and the price varies according to county. What they'll do is they'll take your name, search it, make sure there's nothing mischievous or odd about it, that it could have alternate meanings or something like that. They will check, make sure that it is a valid name, that it is not taken someplace else, and they will approve it. Once they approve it, step 2 is you have to publish it in what's called an adjudicated newspaper or an approved newspaper by the county for 4 consecutive weeks. Each week it has to run 1 time. So once a week for 4 consecutive weeks. At the end of that time period, the newspaper or the publisher will turn over proof of publication to the county clerk where you filed, and lo and behold, the process is finished. Now you have your fictitious business name. Your fictitious business name is only good for the county in which you file. So, for instance, I file in Riverside County. It is not valid in San Bernardino County. Now, it is and it isn't. I can operate with my fictitious business name throughout the state, but I only really own it in Riverside County, meaning if somebody in San Bernardino County wants to utilize my exact same fictitious business name, they can go to the San Bernardino County clerk and get my fictitious business name. So you think to yourself, well, does that mean I need it in more than one county? The answer is yes and no. If you're going to be operating within your county exclusively, you can operate there just fine. If you plan on moving into another county, no, you do not need to purchase the fictitious business name there. What you do want to do, though, is lock up and get all of the social media aspects involved with your fictitious business name. What you do want to do, however, is get all of the social media aspects of your fictitious business name. If you get the domain name and purchase that, you have now a website that you can build. You can get your Facebook profile. You can get your Instagram profile. You can get any other social media aspect that you want that you think you might use or just get. Here's the thing though. While somebody can get your same fictitious business name in another county, if you have all the peripheral type items, including domain, Facebook, Instagram, that expands your footprint on a much larger scale. So the question is, why would somebody want your fictitious business name in another county? It pigeonholes them just to that county. So get your fictitious business name in your county, but before you do, make sure you can get everything else as well. Once you've found a name that works everywhere the same, get it. Once you've filed and published your fictitious business name, you will get a receipt from both steps. If you take those receipts, you can then go to the bank and open up a business bank account. You want to utilize a business bank account for your business. Any money to and from your business should be going through that bank account. Any money you spend on permits, licenses, ingredients, vendor sign-up fees, new equipment, etc., gas to do deliveries, insurance, whatever it takes, should all be coming from your business bank account. On the same token, any money that your business is making from sales should be going directly into that account. Doing so will make life much easier when it comes to your taxes at the end of the year, paying any sort of sales tax that you might need to pay, also knowing where you are in terms of your sales cap or what you have made profit-wise or what your costs are during the course of any given year. Thanks for watching along. My name is Jay Allis. You can contact me through my email address, which is jallis, JALLIS, @iesmallbusiness.com. You can call our office at 951-781-2345 and ask for me, Jay Allis, and I will be able to help you not just with the CFO, but any other food industry needs you might have. In addition, you can go to our website at OCIESmallbusiness.org. OCIESmallbusiness.org. Thank you.